Hi guys. Today we will analyze Broadcom stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. In the last year, Broadcom was a good performer, but there are some doubts in the very recent evolution. The short-term trend is neutral. The long-term trend is unclear, the stock may continue going up or move sideways. Support level is around $533. Strong support levels are around $490 and $420. Resistance level is around $610. The next resistance level is around $675. In the last month the stock has been trading between $524 and $614 range, which is wide. It is currently trading in the middle of this range. It may be a good idea to wait for a pullback before considering an entry. The stock has an average volume of 2.8 million. This is a good sign as it is always nice to have a liquid stock. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model. Discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 16% per year, for last 5 years. We see that the average profit margin of the stock has been around 23% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 275% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for Broadcom company: bad, average, and good. First scenario. Broadcom will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be a low, 8%. Future profit margin would be a low, 16%. Future free cash flow to net income rate would be a low, 100%. In this case, the fair value of the stock today would be $278. Second scenario. Broadcom will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 10%. Future profit margin would be average, 19%. Future free cash flow to net income rate would be average, 125%. In this case, the fair value of the stock today would be $428. Third scenario. Broadcom will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 12%. Future profit margin would be high, 22%. Future free cash flow to net income rate would be high, 150%. In this case, the fair value of the stock today would be $625. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 15. Minimum rate of return. I will use 12%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For Broadcom, analysts forecast growth rate around 14% per year in next 5 years, and future P/E around 20. Again, I will use 3 different scenarios for Broadcom company: bad, average, and good. First scenario. Broadcom will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be a low, 8%. Future P/E would be a low, 20. In this case, the fair value of the stock today would be $216. Second scenario. Broadcom will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 10%. Future PE would be average, 24. In this case, the fair value of the stock today would be $306. Third scenario. Broadcom will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 12%. Future PE would be high, 28. In this case, the fair value of the stock today would be $420. As you can see, today the stock is overvalued, $577, even if we expect the company's high performance in future. The fundamentals are pretty good. And the stock's dividend, 2.84%, is nice, but the stock is currently overpriced. I like the company, but I would be more comfortable buying the stock at, or below $450. Company strengths. Broadcom is a top 5 global fabless semiconductor company with leading franchises in wired and wireless communications, enterprise data center and storage, and other end markets. The company has grown via acquisitions. In fiscal 2020, growth in infrastructure software offset weakness in the semiconductor business. In fiscal 2021, semiconductors came back strongly, and management is looking for high growth in this business going forward. Broadcom has a high degree of recurring revenue based on multi-year contracts, both in semiconductors and particularly in infrastructure software. The company's strong cash flow generation and financial strength represent a foundation in uncertain times. The company will benefit from higher spending from cloud customers and telecom providers that are looking to upgrade their infrastructure and networks. Broadcom's return on equity of 26% is amongst the best of the industry. Profit margin of 23% is amongst the best of the industry. The revenue is expected to grow by 14% on average over the next 5 years. The earnings per share will grow by 10% on average per year. Risks. Risks include slower than expected consumer demand for devices that use Broadcom's products, greater than projected pricing pressure, more competitive pressures, and inability to find strategic deals. The CA deal added $18 billion in new debt, and Symantec added $11 billion. Broadcom has more debt than cash as a result of past acquisitions, but has shown diligence in paying it down. The loss of the Huawei business and related trade war impacts are hurting Broadcom. The company's dividend, 2.84%, is nice. However, with its high payout ratio, 88%, its dividend payments are not well covered by earnings. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.